Tammy Burkhart, and I am going to be your professor this semester for financial accounting. So this is kind of a welcome video as well as a help you with your homework video lecture all put together. For future chapters, starting in chapter 2, I will probably do one lecture on the chapter and then a second lecture to help you with your homework. But for now, for chapter 1, I'm kind of going to tie all of that together. So, the course is financial accounting. And in the first chapter, they go through and they talk about the different environment of accounting, what GAAP is, generally accepted accounting principles, organizations that play a role in the environment of accounting, like the FASB and the SEC. All of that is in your reading. So I'm going to go ahead and let you read that. Some of it hopefully will be review in terms of what the SEC is and the IRS for government tax purposes. So really for the focus today, I wanted to really go over the 3 main financial statements, or really 3.5 financial statements, that we're going to be talking about this entire semester. And so they're introduced in chapter 1, and then we go through a process of creating and analyzing different pieces of those for the rest of the semester. So to start, I want to start with the income statement. So the income statement tells how the company has done in terms of sales and expenses. So on the income statement, there are 2 main categories. The first one is going to be revenue. And that's going to be, like for a service company, it would be sales commissions or any kind of sales that the company is doing. So I'm just going to write sales commissions. But really anything that you earn money in terms of a service company, that would go here under revenue. Usually it's just one line, possibly 2 if you have like a rent revenue as well, but for the most part it's just going to be one line, the main course of business. Next section is going to be expenses. And expenses usually has a long list. So what could be an expense? An expense could be, to rent the building that we're in. So rent expense, right? I'm abbreviating EXP for expense. It could also be to pay your employees. So salaries expense. It could be to have the lights on. So utilities expense. We have other expenses that go into running a business like insurance. So insurance expense. Usually if we're running some sort of sales business or a service business, we have supplies. So whether we're doing, running a barbershop or a beauty salon, maybe we would have the supplies of shampoo and hairspray and that sort of thing. Or if we're, a lawn mowing company, we have the expense for supplies. Gasoline for the lawnmower, different other supplies, trash bags and things that you need for that. So those are what I mean by supplies. They're supplies that help you in your business. So I'll write supplies expense. And we'll come across some other expense, income tax expense, those sorts of things. In fact, I'll write taxes down, tax expense. All right, so then once we have all of our expenses for the period, we would have a total line, total expense. And then net income. So net income is going to be the total of revenue minus expense equals our net income. Okay? So that's kind of the long and short of how an income statement would work. Is revenue, we'll take that, we subtract our expenses, and whatever is left over, that is our net income. The next statement that I want to talk about is the balance sheet. Now in your reading, you would have read about the accounting equation, right? The accounting equation, I'll write the acronym here. Assets equals liabilities plus equity, right? Assets equals liabilities plus equity. The balance sheet is basically the accounting equation in its own format. So we start with assets. Now, what is an asset? We learned through our reading that asset is something that you own or control. So, and they're always listed in order of liquidity. So the most liquid asset that you would own or control would be cash. So I'll write that there, cash. Then you might have supplies. I mentioned those before, supplies, that would be an asset to you. And then if you maybe are a larger company, you might have a truck or a piece of equipment that you use. So I'll write equipment. If you're a bigger company, you might own a building, so I'll write that down. And you might own the land that's on the building. So those are the major classifications of the assets that we're going to be using, at least for the first couple chapters. So listed in order of liquidity. Remember, what is liquidity? Liquidity is either cash or how quickly something can be turned into cash or used during the period. So once again, listed in order of liquidity. So that's going to be our first. So assets is going to be the one thing on the left side of the equal sign. So we'll write a total assets here. And we would have like a dollar sign here, we'd have cash, supplies, equipment, building, and land, those 5 items. And then we would have a total assets, we would add all of those up, move that to there, and then double underline our total assets. So that's kind of how that would work format-wise. All right, our next item is liabilities, that's going to be here. Now, a liability is something that you owe. So a lot of us, have bills that we pay, whether we're a college student or, a grown person out working and paying a mortgage. So liabilities are something that you owe. So you might owe, your phone bill, rent, that sort of thing, your tuition bill, right? A company might have a couple different classifications. So the number one liability is going to be an accounts payable. So whether that's an account for purchasing their supplies, account for any of the other types of items that they need to run their business. We're going to call that accounts payable. Usually paid every month, paid off every month. Okay, our next item might be something, if we purchased a piece of equipment, like you and I might have a car, so we would maybe sign a note for a car loan, or a piece of equipment, you could sign a note. That's going to be what's called notes payable. That's something that usually has interest tied to it, and you make payments over a period of time. A perfect example would be a car loan or for a piece of equipment. We'll call that note payable. And that would be kind of a longer term, 3 years, 5 years, 10 years, that sort of thing. The next one would maybe be tied to building and land. I don't know if any of you might have this, but your parents might, a mortgage. So a mortgage would be like on a house and a piece of land. So that would be the next. It would be mortgage payable. So mortgage payable. My writing gets worse as we go down the line. Sorry about that. So once again, the liabilities are going to be listed from quicker to pay off, so paying this off like every month or every couple of months. A note's going to be maybe 2 years, 3 years, 5 years. A mortgage might be 15, 30 years. So that's how they're listed. We can do a total liabilities here. And our next category is equity. Right? Our last category is equity. There's always only 2 things under equity. The 2 things are common stock, right, or capital stock. They're kind of used interchangeably. I should have probably said capital stock. Capital stock and retained earnings. That's the only 2 things that ever go under equity. So let's write that down. Retained earnings. And capital stock. Then we'll have a total equity here. Total liabilities, total equity. Then we'll have total liabilities and equity. I kind of ran out of room, but we would have total liabilities and total equity, and then those would be total here with a dollar sign, and that's the balance sheet. Okay, so what I want to do for you now is a problem that you had to work on. I'm just going to log into my computer really quick. Sorry about that. You had to do a few problems. For, let's see, problem 1-4B, right? You had to do problem 1-4B. I'm actually going to do a portion of that problem for you right now. So
the first part of the problem, actually I can read it, I've got it here I think. The first part of the problem said to do some transactions. It said, I've got my big book here. It said indicate the effects of each transaction and the balances after each transaction using the following tabular headings. So you have that. You've been doing that in the previous few, so I'm not really going to go over that. In fact, I don't have enough board to do all of that long business. If you've started your homework, you know what I'm talking about. What I want to do for you now, for problem 1-4B, is I want to do number 2. Number 2 says, prepare an income statement for April, a statement of stockholders' equity for April, and a balance sheet as of April 30th. I want to do all of those for you, including the numbers. So I'm basically giving you the solutions to half of one of your homework problems. Sometimes I do the B problems, the actual problems that you have to do for homework in these lectures, and sometimes I'll do like an A problem, a problem that mirrors your problem, that you can kind of work through and then work on your homework when you get a chance. But for today, I am going to actually do the problem that you had to do in the book. And so this is going to be for custom realty. I'm going to start with the income statement. And this is always going to be for a period of time. For the, I think it's the year. For the, oh no, it's for the month. For the month ended April 30th, 2008. For the month ended April 30th, 2008. So that's going to be my heading, okay? And then just like my notes, right? These are going to be your notes. You're going to keep these with you as you go through the chapters in the course. I'm going to start with my revenue. And in this case, I just have one item for revenue, and it's sales commissions. So I don't even need a heading because I only have one item. I just have sales commissions. So I'm going to start with that, sales commissions. And this number, since I don't have multiple revenue, I'm going to move over to the second column. So there's probably already a dollar sign there, I believe there is, and your number is going to be, just let me double check, 19,800. So that's over here in the second column, right? My next line is going to be expenses, just like here, with a colon. That might already be there for you. And then I'm just going to start listing them as they appeared in the book. So I have rent expense, salary expense. And I'm going to put those here in the first two columns. Those are going to be 3,600 and 2,500. And then I'm going to keep going. I've got automobile expense and supplies expense. And those numbers are going to be 1,350 and 900. And then last I have a miscellaneous expense for 600. I'll abbreviate that. Okay, I'm going to add that up. I'm going to have a total expense. I'm going to add that up and actually move it over. My total expense is $89.50. Remember what I said over here in my notes. I'm going to take the revenue, in this case just the one revenue of $19,800. I'm going to subtract my 5 expenses. Those are going to be added up to equal $8,950. And then my net income is going to be $10,850. So I'll come back over here. I'll write net income. And that's going to be $10,850. Okay? So that's what you're going to enter in for the income statement for the problem 1-4B. Remember, the income statement, always, revenue minus the expenses, okay? So now I'm going to move into the next statement. I think it might be the statement of stockholders' equity. So we'll do that first before we get to the balance sheet. So let me just double check. Yeah, so the next statement is going to be the statement of stockholders' equity. So let's do that. I didn't give you any notes, but we'll do some notes right now. Statement of stockholders' equity, also going to be for the month, same, for the month ended Y8. Kind of squishing it in. All right, so for the statement of stockholders' equity, there's going to be 5 lines, okay? So the 5 lines are going to be this. We have our beginning balance, and that would be as of April 1st, 2008, okay? Then we're going to have our issued common stock, and we'll get to that in a minute. Then we get our net income, which we just arrived at right here, $10,850. We also have our dividends. And that's going to give us our ending retained earnings in April. So ending balance would be April 30th, 2008. So this is not only the layout, the 5 lines that I talked about, but this is also going to be for Custom Realty. I'm going to have to get my eraser. I'm going to have to erase our balance sheet. Sorry about that, just to put our numbers in. Okay. All right. So the beginning balance, since this is a startup company, the beginning, and there's 3 columns, by the way. So since this was our first time starting up, this is the company's first month in business, there is no beginning balance. There's nothing prior to April 1st. April 1st is when it all started happening. So the issue common stock, I think we had that. That's going to be $24,000, and that will be up here. 24,000 would be in this line. Okay, and then our net income would be in this in the second line under retained earnings. And then this would be the total. So that's kind of how it would work. It's got 5 lines, 3 columns. We didn't have anything in the beginning balance. We had common stock issued of 24,000. Net income is going to go under retained earnings. Our net income, I already found $10,850. That's going to go here. Okay. We did have dividends up in number 1. Dividends was $3,500. So dividends we know is going to be subtracted. So we'll subtract that. And then we get our ending balances. So let's write some lines underneath this. So our common stock issued was only $24,000. We have $10,000 in net income minus $3,500 for dividends. So I'm going to take the difference there. $7,350, and then we'll just bring the totals over. So for the total here, it'll be $24,000, $10,850 for net income, subtract $35,000, and so we'll take these two, add them together, subtract the $3,500, and I think I could probably do this on my own. I'm going to add $31,350. Okay, so that will be our 5 lines, 3 columns. Let me just double check I did my math right. Yep, $31,350. All right, so that's how we're going to do this statement. Last, the balance sheet. I know I just erased our notes, but we can remember it based on the accounting equation. So the balance sheet is going to be as of a point in time. So the last two, the income statement and the statement of stockholders' equity, were for the period of time. So in this case, for the month. It could be for the quarter or the year. A balance sheet is as of a point in time. So a balance sheet is going to be 1 day. So this is going to say as of April 30th, 2008. So you might say, well, wait a minute, if it's a point in time, you could have one for every single day. You could. You could actually do a balance sheet for 365 days in the year. Anytime something changes on the balance sheet, you could do a new balance sheet. It's typically not done. It's typically done at the end of the month, end of the quarter, or end of the year. So in this case, at the end of the month. So we start with assets. from our work in number 1 that we have cash for a total of $31,500 and supplies for $300. And that's all we have for assets. So in a smaller company that doesn't own any big pieces of equipment or land or building, it could likely be just cash and supplies. So our total assets is going to be, just adding this up, $31,800. We'll write total assets. And we will double underline that. I'm not sure what the computer does, but you would double underline it. All right, then we have liabilities. I think we just have one. Accounts payable. The accounts payable amount, since it's only one, is $450. So we'll move that over here to $450. And then we have equity. So we're always going to have two lines of equity. We've got common stock and retained earnings. All right, for some reason they have those kind of over here on the side. I don't know, on my system, I don't know how yours looks. But the common stock is, we just had it on the board, 24,000. The retained earnings is 7,350. So we're going to add that up. That's going to be 31,350. Remember, assets, so this number has to equal liabilities and equity, right? These two together. So we want those two numbers to equal. I think they do. 450 and 31,350 equals 31,800. So just like the name says, balance sheet, you have to balance. So your assets, remember your accounting equation, your assets here have to equal both liabilities and equity here. And that's what makes them balance. So in chapter 1, I know we also talked about the statement of cash flows. You do have a problem that has that. There's 3 different activities. I'm going to have you kind of muddle your way through that. The statement of cash flows is a difficult chapter. We don't actually do that for this semester. That hopefully you'll get into in either managerial accounting or finance. You do have a problem that asks you to kind of put the activities into different sections in your next problem in 5B. But for the most part, okay, financial accounting is these 3 financial statements that I went over. Mainly the 2 that are on the board, the income statement, right, and the balance sheet. So once you understand conceptually what goes into them, how to format them, really what they're telling the user, the better off you'll be, because you want a solid foundation in chapter 1, all the terms, the format, things like that, because once we get into chapter 2, we'll start doing journal entries, and that's where things kind of go sideways with all the debits and credits and all of that. For those of you that have taken a financial accounting class before or just heard about journal entries, you know what's coming. So a nice solid foundation in chapter 1 is going to be key. Please, please, please email me if you have any questions about this chapter. The financial statements really is what I want you to focus on. I know there's a lot of work in the homework having to do all the pluses and minuses in each category. Don't really stress out about that too much. I know it is your homework grade and you want to get as many points as possible, but you really, really, really want to understand the financial statements. So please email me if you have any questions. Otherwise, I'll see you for the next chapter. Bye.